Welcome, guys. Welcome, guys. So this is the FX Street Premium webinars. My name is Navin Prithyani. I am your mentor at Urban Forex and senior trader at forexwatchers.com. And I want to start off by saying thank you to FX Street for having me here again. It's always a pleasure being here. I come here every month to host a single premium webinar for you guys. So those of you who are here, please note these webinars are a little bit extra special. These are not your typical public webinars that I do on YouTube or anything like that. These go into a little bit more depth, okay? So let's get started here. Let's get started. We got 45 minutes to ourselves, and the purpose for today's webinar is going to be live analysis. So let's take a look at some charts together. How many of you guys here already know who I am? Anyone new here for the first time? Okay. Okay, looks like no one is new here. Everyone seems to be been here before. Okay, great. Okay, so let's get started. A lot of you guys know then how I do my things here. So let's have a look. Moham. Okay. So looks like one person in here. Okay. So let's take a look. So the first things I do, obviously, is I look at the strength numbers. I'm going to go into one of my websites, look at the currency strength, just have a look at where the flow of the market is going. Just for a week, 1 week. Okay. On the smaller time frame, which is the 4-hour time frame, I'm looking at pound strength, yen weakness, Aussie weakness, New Zealand strength, and Swiss franc strength coming in. For the higher time frame, the daily, looking at US dollar weakness, Swiss franc strength, pound strength, and CAD weakness. Okay. Now I jumped onto CAD weakness not too long ago, just slightly before this webinar started, basically. So I'm in on this trade already. As you can see, I have a position here running. And let's take a look at that. Let me get you the time. So I got in around 35 minutes ago. Got in around 35 minutes ago at the price of 9056. Okay, we'll talk about this in a little bit. The trade still has a lot of distance to cover. Just prior to starting this webinar, I removed around 10% and stops are at break even. So it's a risk-free trade. I didn't want to be having to watch this trade while doing the webinar with you guys. So let's take a look at what some of the other folks are saying. Some of my traders in here. Let's say, okay, so we got Barry in here saying, I took this buy. This is a test trade for me. I have a small position, but I wanted to share. Let's see if it works out. Okay, so he's under training right now. He's looking at New Zealand Swiss franc. So before we get into New Zealand Swiss franc, I'm going to reconfirm with the flow to make sure, what is he doing? Let's have a look here on the week. There we go. So New Zealand seems to be okay. I'm looking at this as a neutral, but slightly in the past, New Zealand seems to be neutral for quite a long time, actually. And Swiss franc is at +7, which means it is a strong pair. Okay, so people around the world seem to be buying Swiss franc quite aggressively, and this has been the story for Swiss franc since early this week, all of this week, since January 25th all the way till now. People have been buying Swiss franc. So when we look at New Zealand Swiss franc, let me open it up here. Okay, let me start off by the daily. Let's have a look here. Okay, this one's a mess here. Okay, let's see what he's looking. He's looking at the 4-hour 60 for the buy. 4 hours being his higher time frame, 60 being his lower time frame. So let's have a look at that on the 4 hours. Let's just try to understand, well, what's going on here. Okay, we seem to be having a slowdown towards the bottom here, and then a strong push up. I believe he's trying to buy this from the bottom yet once again. Okay. So buying off of support. Now, a couple things to remember. Now, It might seem unusual, a lot of these techniques of, buying in all these places. Even if you look at my New Zealand CAD, it looks like, why would I buy on such a strong down move or such a strong down move? Or, why the buys are happening there. So, let's start off with some of the basics. If you don't know the basics. Now, the market works in a general pattern. Okay. This is the human psychology movement, if you want to call it. Without the understanding of the human psychology, you're not going to get any trades done successfully. Okay, always remember one concept. There's a reason why there's a 95% and a 5%. Okay, you probably already heard this number like 1,000 times before. But have you ever wondered, if I say right now in the market, who's buying, who's selling? Well, the answer is everybody's buying and everybody's selling. So if everybody is buying and if everybody is selling simultaneously, how do you get this kind of odds? How does that work? Right? Do you guys ever wonder that? If at any given time someone is thinking, according to my MACD or my stochastics or my MAs, it's a buy. Some people are saying, according to my price action, it's a sell. Some people are saying, according to my divergence, it's a buy. Another person saying, according to my bat pattern, A, B, C, D, it's a sell. So how do we end up with a 95% failure rate? How is that possible? The market should be doing a 50-50. Oh, sorry. Market should be doing a 50-50 kind of thing, right? Well, the general concept is the market does all do a similar thing all the time. Okay, and I'm going to explain that human psychology for you. This happens every single time, time after time after time after time. It's almost ridiculous. Okay. Okay, always remember this. In the markets, when the markets start flowing, it's generally the larger players that activate the first move. Okay? They activate the first move. No one knows about it because they might be looking at this as, let's say, a downtrend, right? In a downtrend, who thinks of a buy? No one does because everyone is taught the trend is your friend. So just respect the down. You're supposed to do the down because your eyes see a down. Okay? So the first move happens and everyone's like, it's not a big deal. Markets come down again. And then around here, some professional traders pick up this trade after the larger players. Okay? Large players being banks, institutions, hedge funds, people with information that traders do not have access to. Okay, let me repeat that. People with information that traders do not have access to. Okay? So around at this price, traders look at the big boys and they're like, I know what they're doing. I'm going to buy it right now with them. So they buy it and prices start to rise up. Now, as prices start to rise up, the public starts to notice. They're like, oh, what's going on here? What's going on here? Why is markets going up? I thought it was a sell. I was selling it this whole time. I thought it's a downtrend, and then I'm doing some kind of support resistance pullback sell. My MACDs, my MAs, everything was telling me to sell. They were all saying sell, 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 sell. Why is it going up? As it pulls down and it rolls over, the public still looks at this like, okay, I think it's going to go down now. But during this time, when something aggressive happens, like a spike or some aggressive movement up, that is when the shock becomes a confirmation that, oh my God, what just happened? It's not a sell, it's a buy. And the buys don't activate here. They activate here, 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 here. Those were all the buys activate. Now, if you look at the price on the right side, the average retail trader does not get this wonderful price down here where the price began. They're taking the expensive prices in hopes of maybe one day it will go higher because it's already been going higher. Similar story to Bitcoin. Anyone who got into Bitcoin November, December after a sudden move up, everybody on the news, your cat, your dog, your neighbors, any people in the graveyard suddenly stood up and saying, I never invested in my whole life, but I know this thing is going to go for a buy forever. That's how the market works. This is generally the concept. It's not a new thing. It's just whether you look at it on a large scale for a whole industry or you look at it on one small time frame, it just repeats itself. This pattern, human pattern, repeats itself. Does that make sense? Is everyone with me so far? So whenever this happens, even though it looks like it's an uptrend and everyone is buying, it's actually preparing to turn around to drop aggressively. Okay? And there's a lot more to it, of course, and than just that simplicity answer like that. But generally, that's how you get the 95% because everyone is now, the public is buying over there. They're not buying down here because they don't know to buy down there. It's a downtrend. Why would they buy in a downtrend? Doesn't make any sense. It's too scary. People want to buy when they know it's a buy already. Anyone who's doing any kind of business, anyone who's doing any kind of thing out there, someone must have done it. Someone must have made money. That's why they're trying to do it. They're trying to make money. So they're trying to copy, but they're only getting in afterwards. Okay? That's how you get the 95.5. Make sense? So far, so good? Everyone understanding the logic? Okay. Let me just see if how does this thing work? I hope you guys are not asking your questions or anything in the question box, but you are actually doing it in the chat area itself. Okay. Because that is the best place for me to see your questions or answers. All right. So let's get rid of all this. So these are basically some of the basics, very, very basic stuff of, you get into the market too late, it's almost like you're asking for it. Okay? You're asking for trouble. Okay? And it's just the way the market works. It's not that the market is trying to attack you, your broker is trying to give you a stop loss or any of that stuff that we normally like to blame things for our unsuccessful failures. It's just human behavior. This is how humans react to the market. And that's why the market is so fruitful to people who do know how to take advantage of that information. Okay? Because it just repeats day after day after day. All right. So now let's take a look at some of the charts there. Okay? Carlos, you get the 95% because they don't trust their skills. The question when taking a trade is never whether one is going to make money or not. Well, even if they trust their skills or not, a person who is buying here, for example, who buys up here, okay, he might still hold on thinking one day it's going to go by, and then still holding on, and possibly still holding on. You see, that's the thing that happens with the average trader is he might come up with a strategy to get in, but there is absolutely no strategy on when to get out or any kind of trade management. Okay? So here's another thing, right? The average trader is trading like an investor. Because think about it. The moment, here's all the work that's been happening. Here's the research phase. Here's the entry phase. And then after that, from the entry to the close is a big question mark because everyone is just waiting to see how much profit, how much loss, how much profit, how much loss. Decision-making abilities are not here because the brain is hijacked to only look for the profit side. They do not see if the market's turning around because they only want to see the direction that they're in. Okay? And any green numbers feels good. Any red numbers, fear increases. But there is no analysis from this stage to this stage. And that's actually where trading happens. That's the trading part. Anything before that is simply investing. Okay? Okay? Carlos, you got to have all the rule parameters. We communicate in languages because of their grammatical rules, not the languages themselves. Okay, I'm not sure what that has to do with trading itself, but I guess you're trying to say the same thing if that's what you're trying to say, right? But, what I'm trying to point out is if you want to really pick up on trading, focus on this section. Focus on this section. If you haven't made a consecutive profit in the last week or 2 weeks or in the month, if you pull up your account and you don't see a positive outcome, then this piece is missing. Trade management is missing. Okay, whatever strategy you might have, because every Tom, Dick, and Harry has a strategy on the market. Everybody has one. All it takes is one wrong trade to happen or one losing system. They will go and find a new strategy. And once they find a new strategy, if they're not winning consistently, it's because this part is missing. Is the trading part, not the investing part. Investing is just, where's my opportunity to get in? Trading part is, how do I handle it if I'm in? That is trading. How do I handle a trade if I'm in? Okay, many people have that misconception of I can pick a trade, they'll get in, they'll make a loss from it, and then later when the trade works, they're like, you see, I told you I was right. Who cares? Who cares if you were right? If you didn't make any money from it, who cares? Hi, Penny. Penny here. It's my first time. I can't hear you. Let me turn off my audio, turn it back on, see if that works. Okay. Is that better? Can you hear me now, Penny? Okay. I think Gregor, you can hear me. Gregor McKenzie. Yeah. Okay. Okay. So, all right. So let's take a look at some of the things that are setting up in the market. So a couple things here, right? Okay. Yeah. Okay. I think FX Street is helping them out. Okay. So he's trying to do a buy on this one. Okay. Now, a buy on this one seems to be a little bit on the aggressive side. Okay. A little bit on the aggressive side, but I can see the reasoning behind it. I can see the reasoning behind it. Okay. Now, the way we look at this, okay, take a look here. Markets are in a downtrend, down, 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 down. Okay, let's start from the 4 hours because that was his what we call the big boy. Okay, the big boy says markets are in a down, down, down. Okay, but there is a sequence to it of markets are slowing down, slowing down, slowing down. Okay, how do we know that? It's not because of he broke this support resistance, it's a down. No, it's not that needs to be focused on. It's also that, but it's also look at the speed, look at the distance. Okay, next phase. Look at the pullback. Okay, if anyone says, oh yes, that's a 30% in Fibonacci, I'm going to shoot you. Look at the amount it's pulling back. It has nothing to do where it pulls back to. It's how. It's never the location, but it's how. Okay? If you understand how, you are now reading the markets and you're not hoping for a location. Okay? And then it comes down again. But look at this time. It takes longer to come down, almost that same distance, and then it starts hovering and comes down choppy, slowly, choppy, slowly, choppy, slowly, choppy, slowly. Same distance, which took 8 hours to come down, retraced, he pulled back, right? It bounced back in 8 hours also, but it bounced back only what looks like 30, 40%. Okay? Followed by the next move down, which took since January 25th all the way until the 31st. Instead of 8 hours, it took 5 days to do the same distance. That tells you something. That tells you something. Markets are seeming to slow down for that downtrend. Okay? Players might be shifting. Okay? Now, in this phase, look at also the retracement that comes in. Whoa. Last time it was 20, 30%. This time it's 70%. Not only is it slowing down, oh, sorry, what is that? Not only is it slowing down, but it's also pulling back in very, very deep. Okay, very deep. Now, there's a concept I teach some of my students. It's called the rubber band man technique. Okay, rubber band man technique. So imagine, okay, this is going to help you to try to understand momentum. Okay, so imagine you're a person, right? You're like this little dude right here. You're like, okay, and you are a runner. Yeah, you're a runner. You got a little headband on. You're like, yeah, I'm going to do this. Woo. Here we go. So your job is to run. Okay, but around your stomach or around your waist is this band of rubber, like an elastic rubber band pulling you back every time. Okay, so when the market is moving up, imagine the rubber band man, he's running straight up. Okay, he runs from here to here. He runs that far. That is the maximum height he runs to. Okay, from that point, the rubber band pulls him back and he rests, almost like he's pulling him back, pulls him back 30%. And the rubber band man's like, I got this. I'm going to run again. I can do this. He runs and he breaks his record, his last record. But this time, he gets that far. It's like, whoa. His last run was, let's say, this far, and he rested this much. It's both of those combined. Not just one piece, both of those combined. But his next run, I can understand he beat his record, but his run was so much less. And now his rest is coming down 50%, 60%. Whoa. What can you tell me about this runner who's been running up this way? What can you tell me about this runner? Is he strong or is he weakening? Okay, what can you tell me about him? Is he strong or is he weak? Okay, so those of you who are saying weak, good. He's getting weaker, right? But is he dead yet? Is he dead yet? No, he's not dead yet. See, that's where the mistake comes in with a lot of these, Fibonacci traders who are coming in thinking, okay, I got this downtrend. And then I got a pullback coming in, right? Everyone's like, okay, 50% hit the sell, 38% hit the sell, 61.8% hit the sell. Why? No one has any clue, but just hit the sell. Okay, wait a minute. If the market goes up, starts pulling back here, rubber band man's got energy. He's still running. Then he goes up again. Whoa, he has more energy than last time. I don't care if that's 50% Fibonacci. It's not going to work if you hit that sell, people. So keep that in mind. Keep that in mind. I do this with with all the purposes. I'm trying to give you this analogy so you can keep it as a back of your mind tool to understand it's not just about support resistance training. It's not about just figuring out what my location is, but it's how. How does the market go to your location? If you can read the how, you are now reading the market to its complete potential, and you can analyze better, much better, 500% better. Okay? Who's with me? Everyone with me so far? Does that make sense? So not the location, but how. Okay? All right. And then markets. Okay, so this rubber band man, he's running upwards. He pulls back 30%, 40%. Okay, that means he's resting. Okay, but he's not resting a lot. He's resting 30% of his original move because the rubber band is pulling him back, but he's like, no, I'm not going to give up. He goes again. Whoa, he beats his previous record and he doubles his run compared to last time. There is no way this rubber band man is running out of steam. This guy's got it. Then he rests. Whoa. His rest is coming in 70%. Okay, now we got a dilemma. Why is he resting so much? But his second run that he did was stronger. Okay, we're going to give him the benefit of the doubt. We're not going to give up on him just yet. I do know he's tired, but I do know according to his last run, he also has energy. No decisions are to be made yet. Nothing. Okay? As the markets now run back up, run back up, run back up, he barely is right. He's trying. He barely makes a higher high. And then he rests down like this. Whoa, that's like a 100% rest. 100%. Whatever run he did upwards, he came all the way back down. Now, a Fibonacci guy is like, oh yeah, 61.8. Of course, man, I knew it. Yeah, dude, just listen to me. 61.8, you'll make $1 million just following me and my Fibonacci numbers. Okay, I get that. But now you know the real reason why it worked. Okay, you know the real reason why it worked. You can throw your Fibonacci out the window. You don't need it. You need to read the markets. You need to read the chart to the best of your ability. Okay, so when this happens, you're like, okay, now that he's dead, the buyer cannot perform. I need to prepare for whatever best price I can get so I can rejoin this sell to the downside. I can rejoin them. All you're trying to do is, from this downtrend that was happening, you're trying to get a very good discounted price right here, but you don't want to enter here or here or here or here. Don't guess. Don't guess. Get into the best of your ability. Let me show you something. This New Zealand CAD here. Okay, this New Zealand CAD that I'm in. Okay, let me show you on the 5-minute chart. Do you see that entry I have? Does that look like I'm scared at all that this trade is going to go against me? Okay, I'm going to put my mouse above my entry. Do you see my stop loss size? It's 6 pips. Half of that is spread. Okay? A stop, once you read the markets to the best of your ability, your stop loss is a formality. But you need to know that the markets are willing to go. This can happen when you know how to read the markets. Everyone with me so far? Okay, if you're just guessing, then it's just like going to a casino. You have to know that if 95% of the people fail, then the education that you're getting from the internet, the average education, is a failing education as well. It's like the blind leading the blind. Does that make sense? Does everyone understand? See, so the whole goal for me is not just to show you how a trading is done, but also explain it in a way that you will understand. There are a lot of good traders out there, but unfortunately they're not able to explain it, whatever's in their mind, to bring it out to you guys to learn in a very easy and simplistic way, right? Do you guys agree? There's some good traders out there. Unfortunately, they just can't explain it in a way to understand. It took me a very long time when I was starting to trade. It's like, it took me 7 years before I can become consistent. Right? So it took a long time. It took me going through several mentors and coaches and, training programs. I mean, 90% of that was, garbage, but there are some really good ones out there as well. Okay? It's just they need to click with you. They need to teach in a way that works for you. Right? Okay. So going back to that one that I was looking at. What was it? Was it New Zealand yen? Oh, sorry, New Zealand Swiss franc. Oops, New Zealand Swiss franc. Sorry, I made this one more educational for you guys, but I think it's good. I think it's important that you guys see all this. Where are we? Here we are. Okay, and then you'll start to realize how my traders are doing their trades also, and how well they're doing and why. Okay, so let's have a look at all this. Okay, how many guys are watching this right now? There we go. Okay, so I'm going to check up with you guys one by one here because, like I said, this is a premium webinar. I want to make sure I give you guys, personal attention. Abdul, Carlos, Elena, Gregor, Mark, Moham, Pat Katz, and Penny and Thomas. Everything making sense so far? Any questions up until this point? Okay, now I'm going to show you one incredible thing here. Okay, I'm going to show you one incredible thing here. It looks like there's no questions up until now, but if there is, just type it and I'll get to it as I see it. Okay, here's the thing up until now. So remember that rubber band man, right? Don't forget him. Don't forget him. This is something I teach in my courses. I'm giving to you guys for free. So enjoy it. Now, as you were watching this rubber band man thing going up, remember I told you earlier how the human psychology works. When the average person sees the movement go up, they don't know to buy it. And then they see this and they're like, whoa, what's going on here? It's going up really fast. I don't know what to do. Then they see it go up even more. All the buys I told you activate up here. All the buys activate in there. And once the buys activate in there, these larger players are like, good, good. The more I can get buyers buying at high, expensive prices, the more I can load up on my sell. Because the larger players, they need a lot of orders. You're not going to get a whole bunch of orders if you put $1 billion right there. You need to split it up. Put a little bit of money there, a little bit of money here, and then as more and more people get greedy, thinking, oh, it's going up, so it must be a buy, everybody's willing to pay a higher price. It's like when Bitcoin kept going higher and higher, it's like $15,000, $16,000. Everyone's like, oh, okay, I'll pay 16,000. That's fine. I'll pay 16. I'll pay 16. And anyone who wants to get rid of their Bitcoins, they're like, perfect. I have so much to offload. I need the majority of the public willing to buy at these expensive prices so I can get rid of it. That is the pure essence of trading. One side offloading it to the next side. But if you have a lot of money who needs to be offloaded, the only way you're going to get a big chunk of people willing to buy from you is if you have or create this scenario of, hey man, market's going higher. Hey man, markets are going higher. Hey man, the markets are going higher. Oh my God, it's a buy, it's a buy, it's a buy. Look at that big, strong green candle. And once that happens, all the cells activate from the larger players. That's how you get a 95.5. Okay? Odds worse than a casino. Odds worse than a casino. Okay? Is this logic still valid for news moves? Yeah, it's valid everywhere. It's valid everywhere. This is a news move right here. Okay? It's valid everywhere. Everywhere. Okay? What do you think happened in this news move, Abdul? What do you think happened here? When people saw this, what do you think they wanted to do? Buy. It's normal. It's human behavior. You know, they'll see all this. They're like, okay, buy it. Buy it, buy it, buy it, buy it. Okay? When in actuality, you have to look at it, analyze it, and be like, okay, I can understand the markets are slowing down. Okay, I can see the slowdown happen, and then the big buy happen. Okay, good. I know where the big player is trying to take it. But no way in hell am I going to be that player who buys it from the big boys at a very expensive price. Give me a discount, and I'll think about it. So, but I want to see the discount slow down. If the discount does not slow down, I am not buying it. So let's watch the discount slow down. Let's go to the 1 hour. The discount's coming in hot. That means no one is willing to buy it. Why is the discount coming in hot? Okay. Rubber band man, same thing, right? The guy is running down. He's running down. He's running down. He rests a little bit. 20%. Okay. Then he runs down. Whoa. 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 He's having a hard time running down. He is barely beating his previous record. Okay. This kind of slowdown aspect makes my trader saying, I'm interested in a buy. Look at his entry. Look at his stop loss. Look at his take profit. Does he look like he wants to take the buy forever and take it all the way to the sky and maybe like show up in heaven or something? Like okay, I did my buy and I was hoping this buy is going to go forever until the universe ends. No, he's got a plan. He knows where to get in, where to get out, and why. The next step. Once he does the buy, what am I going to do inside that buy until I exit? What's my game plan? What's my plan B? If things turn around, what am I going to do? All this makes a trader. Anything of that is missing, you're simply an investor or a gambler. Right? Does that make sense? Do you see now how this can be a situation? Okay, Abdul, but can't this slowdown be a trap? Absolutely, it can be. Absolutely. That's why you always need to have a plan B ready. You always need to have a plan B ready. Okay, just like this buy could have been a trap up there because the buy jumped up very aggressively, came back down, right? Let's go here. Just like that buy jumped up very aggressively. Now, notice, do you notice this thing exactly like the rubber band man I was showing you? Take a look at this. Mr. Rubber Band Man running up, runs up, starts from the bottom, okay? Runs up, he rests 50, 60, 70% maybe. Then he runs up again. Would you say he's healthy? Look at the run he did the second time. He's pretty healthy, isn't he? Yeah, he looks like he's doing pretty well. And then how much does he rest? He's only resting 10%, 15, 20% max. Wow, this guy must be strong. He's got energy. And then, because just imagine, in this downward flow, no one is buying. But once this thing starts to go up again more aggressively, anyone who was thinking downtrend sell, downtrend sell, downtrend sell is now thinking, whoa, uptrend, buy it, uptrend, buy it, uptrend, buy it. All buys activating here. And that's why that's called the trap. That's what's referred to as a trap. A trap comes in from an area that is an illusion. Because all trades activate up in there. A lot of people's trades activate up in there. Okay, if I put on an MA, here, let me put on some MAs here for you guys. At what point would you say this is a buy for indicator guys? Right? Well, let me get above the 8 and 28. Let me get above the blue line. Let me get above the big, long MA. Then it's a buy. Oh, that guy's in trouble. The guy's in trouble. Okay? So question, Navin, markets trend or not trend, and they do in different levels, volatile environments and non. My question is the following. Is the first job of the trader before learning how to put a strategy together, learn to decipher market environment? Absolutely. Absolutely. If you're a trend trader, right? So that's a very, very good question. And in fact, it's something that I constantly have to drill down, even in my students, this is the first thing you need to do is not just look at, oh, it's a downtrend, so I need to find a good price to get in, right? Does that make sense? That's the normal concept, which is correct. But if this is happening at full capacity, yes, markets are active. You're going to get a nice trade. You're going to get a nice fill. You're going to get activity. This shows larger players are around. In this type of environment, when you got chop, 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 and then you look to the right and you're like, man, that's like 10 pips, man. That's a 10 pip width. For the last 30 hours or so, markets have been moving in a 10 pip movement. Each candle is like 10 pips, 10 pips, 10 pips. When before it used to do 30, whoa, 50, 60 pips. Okay, this kind of stuff, if you're a trend trader and you're trying to do a trend around this area, you're going to have a problem. You don't have volatility, you don't have activity of the larger players, you're going to have a problem. Okay? Yeah, so that's a very good question, Carlos. Very, very good question. So I hope this helps, because that's a question that almost comes at intermediate level. It's not just about a strategy as well, but it's also understanding when to take your trades, right? Remember, the best times to take your trades are around market opens. If you think Forex is a 24 hours market, you are very, very wrong. It is a 24 hours market because it's on, but who moves the market? the larger players, banks, institutions, and everything. So you better be at the screen, ready to go, 8 a.m. London, 8 a.m. US, 8 a.m. Tokyo. You better be ready around those hours because those are the heavily active hours. After that, it's just like you're trying to catch any last remaining wind or tail, any last power left. Does that make sense? Okay, so you want to be, you want to be active around those times. Abdul, so 95% think that it's a start of a new uptrend, I think. Yeah, absolutely. And I think you're referring to this area. Yeah, exactly. It's the start of a new uptrend. Well, yes, but no one wants this price. No professional wants that price. They're like, it started from here. There's no way in hell I am buying it up here. Okay? It's like saying, hey, a Ferrari is worth $90,000, and then tomorrow the price of that goes to $110,000, and then you go to the dealership and you're like, you know what? I will pay 130, no problem. Whoa, whoa, whoa. At what basis are you paying more or paying 110? The only basis of logic to paying a higher price is to know that price will go higher. If you do not know that information, you cannot buy higher. You need to buy lower. Make sense? Okay, Navin, it is my contention that in order to learn how to interpret market environment analyzing charts, we need to use 3 months, monthly, weekly, and daily charts first before going to lower time frames. It is in those higher time frames where we begin to perhaps get an idea of the potential trend reversals, and I mean potential because there are many other variables. Yes, but I stay away from that. In fact, I recommend a lot of my students stay away from that. We have 2 sections in our company. We have a higher time frame section. Let me do this. Long term, right here. We got a long term and we got a short term movement. Okay, long term and short term. Now, long term requires a lot of analysis. Now, let's take a look at someone, here. Here we got some of our senior traders doing some long-term trades, right? So long-term looks at this chart that he's looking at is 240. I know it's a little bit tiny to see, but that's 240 there, which is 4 hours. But he's coming from a higher picture. Let's see here. Looking for re-entries, blah, blah, blah. He's basically weekly, daily. Now, if you go too far away from the time frame you're looking at, let's say you start with the monthly, and then you end up saying, yes, but I don't want to trade next year. I want to trade today. And then you go down to the 60 minutes. What good is a monthly thing going to do? It's too big of a time frame. Just looking at daily and going down to the 15 is still too big. You might get, 5 buys in the 15-minute chart before your daily resumes the next sell. Does that make sense? You have to stick to your time frames and read the chart in front of you to the best of your ability, because that way you're going to get 9 wins, 2 losses. The 2 losses happened because the higher time frame kicked in. But majority of the time, you're reading your chart to the best of your ability. If you keep focusing on how can I avoid those 2 losses, you're going to end up with 2 wins, 8 losses. Because you keep getting sidetracked. I think this is a buy, but I can't do the buy. The big time frame's a sell. Oh, I think it's a sell. I can't do the sell because my daily isn't a buy. Well, when are you ever going to trade then? You get confused all the time. This used to happen to me all the time. I was trying to keep track of everything. Doesn't work. It doesn't work. It's worse. It's a worse way to be on top of the markets. Okay? Traded the past 55 days, Aussie USD, New Zealand USD only. Okay. I mean, that's good. That's good. If that's what you're doing and you're just saying, I can see the trend is down and I'm trying to take all the sells all the way down, yeah, so be it. That's fine. There's nothing wrong with that. Okay? But for the average trader, trying to keep all that in your mind, it's borderline impossible and not recommended. Okay? In my professional opinion of 15 years, not recommended. Of course, everything works. Everything works. But for the sake of simplicity, That's too complex, too irritating, and the losses are high with that for the average trader. Okay, I'm not sure how good you trade, Carlos. I haven't seen you trade before, but from the sounds of it, it looks like you know what you're doing. Okay. Position, swing, and scalp trades in those two pairs. Okay, good, 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 good. All right, so yeah, so that's all the time we have here today. Okay, as much as I like talking trades, I prefer doing more trades. I prefer putting my money where my mouth is, and that's where we stand apart. This is where we're also in FX Street's Best Forex Awards. We're nominated twice in there. So, you know, focus on trading, focus on people who do trade for a living. That's where you want to put your attention to. Okay? There's a lot of information out there. Be careful. Okay? Thanks for coming in today, guys. I hope this was very, very useful. I hope you were able to pick up on the analogies and everything, because you want to keep it as simple as possible, but you want to also stay on top of all of this. Yeah? So I'll be here again next month. Thank you, FX Street, for having me. If you have any questions, Navin at urbanforex.com. I'm going to type it in. That's Navin at urbanforex.com if you want to reach me or my team for any assistance. Thanks again. Thank you, FX Street. Have a good day. Bye for now.